Hello, friends. You are watching the Daily Benefits Update. Like the video, subscribe to the channel, and tell me in the comments from which state you are watching the video. If you have searched for information about the IRS freezing seniors' bank accounts and taking Social Security deposits, and found explanations that make it sound as if every retiree is affected, this video is for you. The actual rule is more specific. The IRS does have collection tools for unpaid federal tax debt. Social Security benefits can be involved in limited situations, but a regular senior receiving a monthly deposit does not automatically lose access to a bank account simply because it is 2026. Today, we are going to explain the difference between a bank levy, a Social Security levy, and an ordinary monthly deposit. I am Andrew, and I have spent time reviewing the official IRS and Social Security rules on tax levies and federal benefit payments. Everything here comes from current IRS, SSA, and Treasury guidance. Before we get into this, if you find this kind of plain language explanation of Social Security, Medicare, IRS rules, and retirement payment questions useful, subscribe and turn on notifications. Every week, this channel covers one government benefits topic in the same straightforward format. Now, let us get into what an IRS levy actually means for seniors receiving Social Security. The most common misunderstanding about IRS account levies is that the IRS can suddenly freeze every senior's checking account and remove an entire Social Security deposit without a specific tax collection case. This misunderstanding is understandable because words account freeze and Social Security deposit sound as if one broad rule applies to everyone, but here is how it actually works. An IRS levy is a legal collection action tied to a person's unpaid federal tax debt. A bank account levy and a continuing levy on certain Social Security payments are related, but they are not the same process. Before levy action, in most cases, taxpayers receive collection notices and rights to request a hearing. To make this concrete, let me use an example. Consider someone like Harold. Harold is 72 years old, lives in Missouri, and retired after working as a warehouse operations coordinator. He receives $2,080 per month in Social Security retirement benefits deposited into his checking account. Several years earlier, Harold had an unpaid federal tax balance from an IRA withdrawal that he did not fully understand on his return. When he sees a headline about the IRS taking Social Security deposits, he assumes his entire monthly benefit can disappear without notice. Here's what is actually happening in his situation. If the IRS follows collection procedures and applies a federal payment levy program levy to eligible Social Security retirement benefits, the levy is generally limited to 15% of the qualifying payment. On a $2,080 payment, that would be $312 dollars, leaving the remaining payment before other deductions. A separate levy on funds already in his bank account follows different rules. Let us start with the foundation. What is an IRS levy? According to the IRS Levy Programs Toolkit, an IRS levy is a legal seizure of property to satisfy a tax debt. It can reach money in a bank or other financial account, wages, vehicles, real estate, and other property when the collection requirements are met. In plain English, a levy is not the same as the IRS noticing that a person receives Social Security. It is a collection step connected to an unpaid federal tax obligation. Before a typical levy action, the IRS collection process normally begins with a bill explaining the balance due, penalties, and interest. If the matter is not resolved, the taxpayer may receive a final notice of intent to levy and notice of the right to a hearing. IRS appeals guidance says a person generally has 30 days from the date of that notice to request a collection due process hearing, and a timely request generally suspends levy action for the tax periods being appealed. You might be wondering, does this mean the IRS freezes accounts without giving people a chance to respond in the usual collection process? No. The rules provide notices and appeal rights before levy action, although special situations can follow different procedures. The practical lesson is that an IRS collection letter should not be ignored, but it also should not be treated as proof that money has already been taken. Now that we understand the general collection process, we can look at bank account levies. An IRS bank levy applies to money in an account when the bank receives the levy. IRS guidance says the bank generally holds the money for 21 calendar days before sending levied funds to the IRS. That waiting period exists so the taxpayer has time to contact the IRS, resolve an error, request release where appropriate, or explain financial hardship. The levy generally attaches to funds in the account at the time the bank receives the levy. Money added after that point is normally not included in that particular bank levy. In plain English, imagine Harold has $3,400 in his checking account when a valid IRS bank levy arrives at his bank. The bank may place a hold on funds up to the levy amount and wait 21 days before remitting the eligible amount to the IRS. If Harold's regular Social Security deposit arrives after the date and time that particular bank levy was received, IRS guidance says newly added funds are normally not affected by that one bank levy, but a new levy or a separate federal payment levy can create a different result. This is why the IRS takes the Social Security deposit with the bank account is too broad without knowing which collection action applies. You might be wondering, can the IRS release a bank levy if a senior cannot pay basic expenses? The answer is that relief may be available. The IRS states that if a levy on a bank or other account creates an immediate economic hardship, meaning it prevents the taxpayer from meeting basic reasonable living expenses, the levy may be released after the IRS reviews the financial situation. A levy release does not erase the tax debt. It changes how collection is handled. This next part is where it gets more specific. Social Security payments can be levied separately from a bank account. The SSA states that the IRS is authorized to levy up to 15% of each Social Security payment for overdue federal tax debts until the debt is paid. IRS guidance explains that Social Security benefits paid under Title II, including old age and survivors benefits, may be subject to a 15% levy through the federal payment levy program. Treasury's Fiscal Service then reduces matched eligible payments and sends the levied amount to the IRS while sending the remaining balance to the taxpayer. In Harold's situation specifically, his $2,080 retirement payment could be reduced by up to $312 through an eligible federal tax levy, leaving $1,768 before Medicare premiums, tax withholding, or other deductions. That is a serious financial detail to understand, but it is not the same as losing the entire Social Security retirement payment. You might be wondering, does the 15% rule apply to every SSA payment? The answer is no. The programs must be separated carefully. IRS guidance says old age and survivors' Social Security benefits continue to be subject to the 15% FPLP levy for delinquent federal tax debt. The IRS also states that it no longer systemically levies Social Security disability insurance benefits through FPLP for supplemental security income or SSI. IRS internal guidance says SSI is a needs-based public assistance payment, and the IRS is not pursuing those payments as a levy source at this time. This distinction matters because many headlines group SSA, SSI, and SSDI together. Social Security retirement is not SSI, SSDI is not SSI, and the levy treatment is not identical for each program. A senior receiving retirement benefits with unpaid federal tax debt may face a continuing 15% levy under the applicable process. A person receiving SSI alone is in a different category. A person receiving SSD, I may also need to examine the exact collection notice and program involved rather than assuming the retirement benefit rule applies automatically. Now, let us talk about another question people often have. What if a Social Security payment is already sitting in a bank account? Once benefit money has been deposited into an account, a bank levy involves account funds rather than the federal payment reduction process. That is why a person may hear two different concepts. One is reducing an eligible Social Security payment before it arrives through FPLP. The other is levying money held in a bank account. The amount, timing, notices, and possible remedies can differ depending on which action occurred. One thing worth understanding about this topic is how it connects to Medicare deductions. Many Social Security retirement beneficiaries already have a Medicare Part B premium deducted before their monthly deposit reaches the bank. If a valid IRS levy also applies to eligible Social Security retirement benefits, the amount visible in the account may be lower than the gross benefit for more than one reason. This is not a new Medicare rule, and it is not a universal account freeze. It simply shows why reading the actual benefit and levy notices matters. And finally, this is the piece that ties everything together. I did not find official IRS or SSA guidance announcing a blanket 2026 rule that automatically freezes senior bank accounts or removes all Social Security deposits. What official sources do show is a long-standing collection process. The IRS may levy a bank account for unpaid federal taxes after applicable procedures. A bank generally holds levied account funds for 21 days. Eligible Social Security retirement and survivor payments may be reduced by up to 15% for overdue federal taxes through FPLP, and hardship or appeal options may be available depending on the facts. So the clearest answer is this: a senior receiving Social Security is not automatically subject to an IRS account freeze in 2026, but a senior with unresolved federal tax debt should understand the difference between a bank levy and a levy on eligible Social Security payments, because the legal process and the financial result are not the same. Before we finish, let me answer three questions that come up most often about IRS levies and Social Security deposits. Question one: can the IRS take an entire Social Security retirement payment for unpaid federal taxes? Answer: under the federal payment levy program, eligible Social Security, retirement, and survivor payments are generally subject to a levy of up to 15%, not the entire monthly payment. Question two: can the IRS freeze money already in a senior's bank account? Answer: a valid bank levy can place a hold on funds in the account when the levy is received, and the bank generally waits 21 days before sending levied money to the IRS. Question three: are SSI and SSDI treated exactly the same as retirement benefits? Answer: no. IRS guidance says it no longer systemically levies SSDI through FPLP and does not currently pursue SSI payments as a levy source under that program. Everything we covered today applies generally, but your specific situation may have details that change how these rules apply. For Social Security payment information, use your My Social Security account through the official SSA website or call SSA at. For an IRS levy notice, use the official IRS contact information printed on a verified notice, or review IRS levy and appeal guidance through the official IRS website. For unresolved hardship, the Taxpayer Advocate Service may help. For Medicare questions, use Medicare's official site or a free ship counselor. For broader aging support, call the Elder Care Locator at. One factual note before we finish: the IRS generally begins collection contact through mailed notices and does not demand tax payment through gift cards, prepaid debit cards, or wire transfers over an unexpected call. Scammers may claim your account is frozen or your Social Security deposit is being taken in order to obtain money or personal information. Verify any collection notice through official IRS channels before responding. I am curious, before watching this, which part of the IRS levy and Social Security deposit question was most unclear to you? Was it the 21-day bank hold, the 15% Social Security levy, the difference between SSI and SSDI, or the rights available after receiving an IRS collection notice? Leave it in the comments. The most common questions become future videos. That is IRS freezes seniors' accounts in 2026 and takes the Social Security deposit with it, explained as clearly as I can put it. The official rules do allow certain levies for unpaid federal tax debt, but they do not create an automatic account freeze for every senior. If something is still unclear, the comment section is open and I read every question. If this was useful, share it with someone who had the same question. I am Andrew. I will see you in the next one.